Hello and a warm welcome. You've joined us on Buy Now, Sell Now, right here on ET Now. I'm Ashesha Advaryu, with me Cheryl D'Souza, and we'll take you through all the queries that you have sent across social media platforms. But for now, for the markets, turning out to be a good start for Indian markets. Cheryl, after the solid 4% uptick that we saw last week.
Absolutely. A very good morning to you, Ashesha, and welcome aboard. Welcome to Buy Now, Sell Now. It is Ashesha's debut show on, or rather debut on Buy Now, Sell Now. So yes, welcome aboard. But yes, if you look at the markets, doing absolutely nothing, like the way you said, Ashesha. Yes, we started the week on a very flat footing, because given the fact that you have a very subdued Q coming in for globally, given the fact that you have Moody's has downgraded US rating. Remember, that's the last rating agency to go ahead and downgrade the US's credit rating, and that sort of has marred the sentiment when you talk across the globe, at least for the US futures as well as the Asian markets. Right now, Indian markets trying to be resilient, given the fact that the macros of Indian markets continue to remain pretty strong. So if you look at the benchmark indices, at least Nifty is now above the 25,000 mark. Nifty Bank actually outperforming the benchmark indices. If you look at the sectoral front, or rather if you look at the Nifty gainers, then it is Bajaj Auto that's the top gainer in the Nifty, followed by Eicher Motors, Hero MotoCorp, BEL, as well as IndusInd Bank. These are some of the gainers on the Nifty at this point in time. While on the flip side is Eternal, or erstwhile known as the Matto, that is under pressure, 1.6% downtick coming in for Eternal. You have Infosys as well, that is under pressure. Grasim, TCS, Tata Consumer are these other set of counters that are in the red. If you talk about the sectoral print, yes, given the fact that you have the downgrade that has come in from Moody's for the US economy, it is not boding well for the IT sector, given the fact if the economy, or there are concerns with regards to the budget deficit or the rising debt levels in the United States, which means the IT sector also will be under pressure. So you have the IT sector back home also under pressure in trade today, 0.7% down to coming in for the Nifty IT index. But that's the only sectoral indices that is in the negative territory, while on the flip side is Realty, PSU Bank, Pharma, all of them holding on to strong gains. And it is key to note exactly what you have the benchmark, or rather the broader markets doing in trade today, because you're seeing a marginal, or rather quite a big outperformance coming in from the broader markets. The small cap index seeing gains of about 1.61% as we speak. So that's the way how the markets are looking like at this point in time, given the fact that we have a very strong move, at least for the broader markets. But remember, viewers, this is a show where we get your answers for all of your stock-related queries. You can write to us on the WhatsApp number that will be flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, along with the buy price, the quantity, and the time horizon. With that way, our experts will be able to help you better. And talking about our experts, today we have Lakshmikant Shukla, who is joining us on the technicals, while on the fundamentals we have Mr. G. Chokalingam, who is joining us on the show. Very good morning to you, Lakshmikant, as well as Mr. Chokalingam. Thank you so much for joining us in ET Now. And Lakshmikant, let me just get a quick view from you when you talk about the markets. How's the texture of the market looking to you at this point in time? Do you think that we are actually slowly and steadily moving in for a consolidatory phase after the rapid up move that we've seen?
Good morning, Cheryl. So market is looking good, as it has already broke its key psychological levels of 2500, and it has not only broke it. It has not only broken it, but it has also given closing above this psychological level of 25,000. So we are expecting that current move toward the levels of 25,300, where we have seen a 78.6 Fibonacci retracement starting from the high of 26,277 toward the levels of 21,756. So overall structure seems to be in a positive territory, and the way market has performed, so we expect that this ongoing momentum will continue. Even if we look at the structure of the bank Nifty, which has given a falling channel breakout on the daily chart above the levels of 55,500. So we expect that now in the upcoming days, the bank Nifty will outperform the benchmark index, and now it is ready to move higher toward the levels of 56,100. And if it breaks this level, then further upside move in bank Nifty toward the levels of 57,000 could be anticipated within upcoming days. So we are expecting a positive upside momentum, And if we talk about the broader market, then a small cap index is approaching toward its 200 DMA. So where we could see some sort of blip in the upcoming days, but on the daily chart now it is looking that it has surpassed its 200 DMA, which is placed around the levels of 17,715. And if we look at the structure of Nifty mid cap, so which has been trending higher for last few days with the formation of higher tops and higher bottom. So we expect that this ongoing rally will continue in the benchmark indices as well as in broader market.
Okay, so that's the word coming in on the markets and the broader markets. But let's get started with all the queries that our viewers have started sending us. First up, we have Nikhil Sharma from Mumbai, who has sent us a query on ITC hotels. Remember, this counter recently got demerged from ITC, so we will not have any technical view on this one. But as far as fundamental view is concerned, he bought it at a price of 205.46, and Mr. Sharma has about 100 shares. Chokalingam sir, if you can help us with your view on ITC hotels.
Yeah, certainly. In fact, we have coverage on the stock. We have a buy recommendation. The latest results also gives us a lot more confidence. And in terms of enterprise value to EBITDA, it is significantly cheaper than Indian hotel. And secondly, it's still left with a lot of cash. And in fact, it has grown the cash after ITC, its parent company, left with 1,500 crore. It has grown it further. And there are a lot of greenfield projects are coming up. So I believe that this is the best to hotel stock particularly in the large cap space for the medium to long term. So we maintain a strong buy on ITC hotels.
Coming in on ITC Hotel, a strong buy coming in from Mr. Chokalingam. Let me take this next query coming from Sandeep. He's writing to us from Noida. This one is for you, Lakshmikant. IEX, actually, he wants a long-term view. So let me go to Mr. Chokalingam. IEX is the stock that I'm talking about, Mr. Chokalingam. He has about 570 shares of IEX, which he's purchased at a level of 203 rupees per share. What's the take coming in for this one over the longer term?
Longer term, I am terribly negative on the stock. Maybe for short term, tactically, one can keep investing and booking profits because it is no longer running a monopoly business in India. BSE started through joint venture, even NSE started, and those two companies are making a lot of money in the equity segment. So it would be very difficult for any standalone power exchange business to compete with such giants. So I believe it's not a great stock for long term. Maybe in the short term, tactically one can play on this and buy and sell if 15-20% upside is there.
Okay, so that's the view coming in on IEX. But we have some more queries that have started coming in. Gautam from Mumbai is asking for a technical view on a better bet between SBI and Aditya Birla Sun Life. Lakshmikant, what will your view be with a 12 to 18 month perspective on both these stocks, SBI and Aditya Birla Sun Life AMC?
Looking at the structure of SBI, I think risk-reward ratio is favorable as stock has maintained its upside posture above its key moving averages, which is placed around the levels of 750 to 740 range, and still SBI is holding its 200 DMA, and we could expect a breakout in the stock at the levels of 830. So that would be the key hurdle for the SBI. So I think he can go long in the SBI at current levels with the stop loss of 750 and can expect the upside move toward the levels of 875 to 900 zone, and once it taken out the levels of 900, then we could expect further upside higher toward the levels of 1000.
I think we have a patchy line with you, Lakshmikant. We'll actually try and reconnect with you and get your view both on SBI as well as Aditya Birla Sun Life AMC. Till then, let me just go to Mr. Chokalingam. Mr. Chokalingam, the next two stocks that I'm going to ask you a query on is IndusInd Bank and Vodafone Idea. We have Ghosh Zada, who's written to us from Delhi, and he wants to know what's your view on both of these counters. They have had their fair share of negative news flow. We've seen how the stock prices have been impacted by those news flows. What's your take?
I would avoid IndusInd Bank when you have so many governance issues coming up one by one. And why to chase such stocks? Because there are more than 4,000 stocks listed, and there are hundreds of small and mid cap stocks which give you a lot of opportunities to make wealth in the medium to long term. So that's my point. And within the bank, you have banks like Canara Bank, Maga Bank, Maharashtra Bank, or in the large cap, you have SBI, which are more promising and they don't have any governance issue. And in terms of valuation, also, they are all trading around one-time adjusted book value. So I would prefer, bank like Canara Bank or SBI Bank to IndusInd Bank. Whirlpool also, the problem is that the durable business, consumer durable business is not taking off in the last 2 3 years. So the growth has moderated it substantially. So I would avoid Whirlpool also at this price.
Okay, so that's the word coming in on several banking stocks, but we'll slip into a break on that note. Many more queries will be solved on the other side of the break. Stay tuned.
Welcome back. You're watching Buy Now Sell Now on ET now, and let's continue taking all of your stock-related query. We have our expert Lakshmikant Shukla on the technicals, while on the fundamentals we have Mr. Chokalingam, who have been taking all of your stock-related queries. On back of that, let me take the next query coming in from R.K. Deshpande, who's writing to us from Pune. Wants to know about Bombay Stock Exchange as a share. Can he look to buy this for a period of 6 months? Lakshmikant, what's your view? Do you think only 6 months is enough time frame to actually buy BSE, or should he actually widen the horizon, given the fact in the last 3 months or so, you've seen a spectacular return of about 41% for BSE in the last 6 months, a return in excess of about 55%?
Yes, Cheryl, you are right that 3 months is very small period of time for making investment in the BSC. I think one should invest for the longer term objectives in this stock. This stock has been making higher tops and higher bottom on the monthly chart, and it has given a strong breakout above the levels of 5,000. And then after we have seen no way downward move in this stock, consistently making higher tops and higher bottom. So we expect that this momentum will continue even on the daily, or we see on the weekly chart, the stock has not made any reversal kind of pattern where we could assume that we could see some sort of correction and still trending higher day by day. So overall, our expectation is quite bullish in this stock, and it could move higher toward the levels of 8,000. So that would be the next hurdle which we are expecting in this stock. And on the downside, till it hold up the levels of 6,860, where we are seeing a strong support. This ongoing momentum on the bullish side in an uncharted territory will continue.
Look on BSE continues to remain very positive. We could see levels of 8,000, and remember the stock is already trading at lifetime high levels. But we also have Krishna, who has written to us from Chennai. He has a query on IT sector stock Persistent Systems. He says he bought 25 shares at 5,659. Remember the stock currently trades about 5,700, and he's asking if he should exit the counter or hold for some more gains. Remember, IT sector has been reeling under pressure, and Persistent Systems is down 11% on a year-to-date basis. Lakshmikant, what will your view be on Persistent Systems?
See, this stock has given consolidation breakout before a week, and then after it started making some sort of correction at lower levels, but still stock is holding its key support. We could expect this positive breakthrough above the levels of 5,950. So once it broke this level, then after we could see this stock could resume its upside momentum, and in that case it could move higher toward the levels of 6,300. So if he has already bought the stock, then keep the stop loss of around 5,500 and can expect the breakout of the levels of 5,950. Once it conquers this level, then we could expect higher momentum in this stock toward the levels of 6,300.
Couple of actually short-term queries pouring in. Let me take this long-term query coming from Jacob. He's writing to us from UAE. Mr. Chokalingam, 2 stocks that he has in his portfolio. One is Tata Power, the other one is Praj Industries. He accumulated both of these counters just as early as Friday. Tata Power, the buy price above 406, while for Praj it is 492 rupees per share. His investment time horizon is above 5 years. He wants to know whether he should go ahead and actually accumulate some more, and also what sort of a time horizon should he or rather what sort of levels can he watch out for both of them?
Both are a really good quality stock coming from good management, good business model, no doubt. But if somebody wants to hold for 3 to 5 years, I would rather wait, and I would give just a hold recommendation on these two, because Tata Power now has a lot of competition from big industrial houses in renewable energy. On the one hand, on the other hand, there are so many small and mid-sized companies that have entered the new energy business. So it's going to be a little tough from current level. And similarly, Praj Industry, the problem is that whenever oil price shoots up substantially, close to 3 digit, uh, this company's product demand increases because they are, indirect competition to oil-based energy sources. But at the same time, when oil price crashes, it has some pressure. Now the oil price is down almost 25% from 52-week high, which is going to give some pressure in the short term. So therefore, I would definitely consider if this two stocks correct at least another 10-15% from here. Otherwise, I would give a hold rating for the short term.
Rating for the short term for both these stocks, Tata Power and Praj Industries. That's the word coming in. But we also have Rajesh Maheshwari, who has written to us from Indore, and his query is on Balaji Amines. He holds about 75 shares at an average price of 2,660. The stock currently trades at 1446, and it has fallen nearly 36% over the last 1 year. So considerable amount of losses is what he is making on his position. And he wants a short-term view on this particular stock. Lakshmikant, what will your short-term view be on Balaji Amines?
So after seeing gradual decent correction from its higher level, now stock has seen some sort of respite near the zone of 1,130 to 140, and then after this stock has recently given double bottom breakout on the daily chart, which is showing positive sentiment. So I think he should wait for the upside target of 1,790 with the stop loss of 320 on the downside. So overall the structure seems to be bullish as prices has already broken its double bottom on the daily chart. And even if we look at the oscillator like MACD and RSI, so MACD started trending higher and it has given positive crossover. Even RSI started moving above the levels of 60 mark. So overall sentiment seems to be positive, and I think he should wait for the target of 1,790 with the stop loss of 1,320 on the downside.
Right, so that's the take coming in on Balaji Amines. This one is coming from Reshnama Bhatia. She wants to know about BEL, that is Bharat Electronics, 500 shares at a price of 300 rupees per share. Already seeing good gains, but what's the future of the stock? Does it make sense to book profits and buy again on dips, or just continue to hold on to this counter? What's your take, Mr. Chokalingam, on Bharat Electronics, given the fact that you've seen defense counters come back to the forefront once again, and Bharat Electronics has been enjoying that sort of ride as well, 50% in the last 3 months. What's your take? Stay put with it?
It's a great company, but is it a good valuation? I have my own strong doubt. Valuations are extraordinarily stretched now, and on the other hand, you are seeing now a lot of signs of stability on the borders. So therefore, I would give a sell rating in case the stock further goes up 5 to 10% also from the current level.
Okay, so that's the view on Bharat Electronics. Hold, because valuations are not really reasonable at this point in time. But we have one more query that has come in from the defense sector, the sector that we were just talking about. Neha from Bengaluru has written to us, and she says that she is making good profits in GRSC or Garden Reach Shipbuilders. And also on Manappuram Finance, what will your view be for 1 to 2 months? So Lakshmikant, I'd like to come to you, especially for Garden Reach, because the stock has already run up quite a bit. What will your view be on Garden Reach and on Manappuram Finance?
See, on a daily chart, the stock has witnessed profit booking near its previous swing high, which is placed around the levels of 2600, and now today it has formed long doji kind of pattern. So I think overall sentiment seems to be bullish till it hold up the levels of 22,500, but now it needs to break this key hurdle of 2,622 while moving on the higher side. Once once it break this level, then we could see upside momentum in this stock toward the levels of 2600. So I think with the stop loss of 2252, she can hold this stock and wait for the upside momentum toward the levels of 2800 to 2850 zone. However, if we talk about Mannapur Finance, then we could expect that stock could move higher once once it will give the consolidation breakout above the levels of 235 to 238 zone. Once it crosses this level, then we could see sharp upside move toward the levels of 248 to 250 zone. So I think till it hold up the levels of 219 to 215 zone, we could anticipate this breakout and could hold the stock toward the levels of for the upside target of 248 to 250 zone.
All right, Mr. Chokalingam, let me come next to you. This one is coming from Geeta Anand from Delhi. Happiest Minds is a stock that they are asking your view on, because she's already purchased Happiest Mind at a price of 1,183 rupees per share in the year 2023. Wants to know whether it makes sense to go ahead and exit because she is actually suffering a loss in this one, or some more, or she should look to add some more right now to average it out.
It is very hard to hear such news because even at 620 level, it is extremely stretched in valuation as compared to other mid-sized IT companies. And definitely in 4 digit, there was no valuation comfort at all. So the retail investor should definitely look at valuation also, not just a momentum in the stock. But having lost so much money, one can hold it because such stocks sometimes they get tactical upside. So in case it recovers, around 700 level, one can cut loss and exit the stock. So one can consider, at this juncture, stock like Cyient Limited. That is one stock in the mid-size IT space gives me tremendous confidence. I don't have the stock personally, but I believe that is one of the best stocks in the entire mid-size IT space in terms of the valuation and also in terms of business model. Apart from IT services, it also has subsidiaries engaged in engineering products and also in semiconductor business. So this is one stock I would strongly recommend.
View coming in on mid-cap IT stocks, but Sunny from Mumbai has written to us and he's holding shares of D-Mart, Avenue Supermart. He wants to sell out of D-Mart and wants to buy Trent. So it's a long-term question. Mr. Chokalingam, I'd like to ask you, especially because of the intensifying competition that D-Mart is facing because of these quick commerce companies, what will your advice be? Is it wise to get out of D-Mart and actually buy Trent at this juncture?
Uh, I would avoid both. As you rightly pointed out, there is a tremendous structural change. People are moving away from stores to quick commerce to e-commerce in a very big way. We saw even other leading house seeing a dip in retail sales. So this is going to be just a beginning of a massive structural change we are expecting. So therefore, I would avoid both DMart and Trend and go for growth industries like banking sector, because double-digit growth in credit is still assured there, or telecom sector where the consistent growth is happening. So that would be a better approach than chasing this retail sector at this juncture.
All right, so let's move on then. Let me take the next query then. And this query that I have is coming in from our viewer. A couple of them actually pouring in today. This one is coming in from Shaurya. He's writing to us from Gurgaon and wants to know about DLF, 100 shares of DLF, Lakshmikant, at a price of around 707 rupees per share. He's saying he can hold on for the next 1 year, but what's the target should he watch out for when you talk about DLF?
The DLF has given once again double bottom breakout on the daily chart, and on Friday it has reclaimed its 100 DMA. So overall structure is on the bullish side, and the way it has given the breakout with the decent volume, now we are expecting this upside move to extend higher towards the levels of 850 to 870 zone. So that would be the upcoming target for the DLF, and if in case of any sort of blip, so I think the levels of 670 could act as the strong support for this stock, and we could anticipate that till DLF hold this level, this upside target of 860 to 850 to 870, we could look for the 1 year.
Welcome back. You're watching Buy Now Sell Now on ET Now show, where we get you answers for all of your stock-related queries. And Mr. Chokalingam, the fact that you've joined us on the show, we have viewers who are very thrilled. And I have not one, not two, but at least 4 queries that have lined up over the last few minutes, only asking one thing. Since you have Mr. Chokalingam on the show, we are a great fan of him, love his fundamental analysis. If you could help us with some few mid-cap or a small-cap suggestion coming in. And in fact, you also have, so this query is from Dr. PVN Rao, who's writing to us from Hyderabad. It's from Venkatesh from Chennai. We also have Sunil G, who is written from Vadodara. All of them want to know some of the stock picks that you're looking at this point in time in the mid cap and the small cap arena for the long term.
Yeah. So thanks for all the kind words to the channel and the viewers. One stock which comes to my mind is Nesco. So in fact, a lot of negative news floating around about in the company not being very aggressive in capex, but surprisingly, it's not true. From around 260 crore in 2014, the gross black has increased to nearly around 1600 crore. That's nearly about 6.5 times in the last 10 years. The company has been very conservatively expanding. And the Q4 result, there was a dip because they've gone for very aggressive investment, and therefore the interest income has come down, and also the exhibition business has contributed a lower profit. This is one stock I also personally invested after recommending to our clients. So viewers should take note of it. This is one stock I continue to believe that it's a great wealth creating stock. And second, as I mentioned already, Bank of Maharashtra, and third, Canara Bank. And fourth stock is Vindhya Telelink. Even now, the stock is still down about 50% from 52-week high. And it is a holding company of Birla Corp, which has come out with excellent results. And in fact, the value of investment in Birla Corp is more than the enterprise value of Vindhya Telelink. So this is another small cap stock I like a lot. These are some of the stocks apart from Cyient. I believe that potential wealth creators. As I already mentioned, Cyient, somehow I like this stock enormously. For one reason that it is already down about 40-45% from 52-week high. And apart from that, it's strong cash and well diversified among 3 verticals. So that gives me a lot of confidence. So among all these stocks, I personally hold through family and my company only Nesco.
Some stock-specific ideas coming in from the broader markets, but we have B. Soumya, who has written to us from Chennai, and he has about some shares of GNFC which were bought at 700 rupees per share, and REC which were bought at 550 rupees per share, making losses on both those positions. What will your view be, Lakshmikant, on both these counters? We have GNFC and REC.
See, GNFC has seen a major correction after making the high of around 776, and then after we have seen that this stock is spiraling in the downtrend. But if we look at the trend of last few weeks, this stock has found some bottom near the levels of 450, and then after we have seen upside pullback move in this stock, now it is approaching to its 200 DMA. So overall structure seems to be bullish, and we anticipate upside pullback move in this stock toward the levels of 565 to 580 zone, with the stop loss of 484 on the downside. So I think it should wait for this upside target of 565 to 580 zone, with the stop loss of 485 on the downside, and we expect that this positive upside pullback move will continue in the GNFC. Can you repeat your second stock?
Yeah, REC. Second question was on REC.
So REC Limited has been struggling from last few days, as this stock has been trending below its all key moving averages. So I think he should wait for the breakout of the levels of 435 to 440 zone, until unless we will not get any decisive breakthrough above the levels of 435 to 440 zone. We will be remain on the bearish side, and if it break the levels of 380, then we could see further downward move in this stock toward the levels of 360 zone. So I think he should exit from this stock, or he could keep the stop loss of 380 on the downside, and if it breaks this level, so I think he should exit from REC Limited.
Right, so that's the take coming in on two of those counters. This one is coming from Sagar. He wants a combination view on JK Cement. He has about 15,000 odd shares of Mr. Chokalingam that he purchased at levels of 169 rupees per share. He's been holding on to this for over a decade or so, and what a multi-bagger it has actually proved out to be for Sagar. Let me take first bit of the question to you actually. Lakshmikant, because he wants to know, do you see more leg on more scope of an upside for JK Cement despite multiple divergence on RSI plus the MACD levels as well? So he wants to know that point of view from you. Mr. Chokalingam, once I have Lakshmikant answer his side of take when it comes to JK Cement on the technicals, I'll ask you the fundamental side of it. Lakshmikant, you can go first.
See, after making the high of 5,387, we have seen a profit booking in the stock. But if we look at the overall structure, then it is still trading in the positive territory till it hold above the levels of 4,920. Yes, you are right that we have seen some sort of negative divergence in RSI and MACD, but still holding its
Right, I think we've again lost the connection with Lakshmikant. I will actually come back to him once again for him to finish his point. Let me come to you, Mr. Chokalingam. So what Sagar wants to know is that with the cement cartel actually going in for consolidation, or the cement players, the big cement players actually going in for consolidation, namely being the Ultratech Group, or for the matter of fact, the Adani Group, what's your view on these small cement companies, especially if, in the light of the fact that they would be pushing in to increase their cement capacity in order to actually meet the competition? He wants to know, do you expect or envisage JK Cement actually going ahead and losing a market share to these big players despite having the higher EBITDA per ton numbers?
Yeah, I agree. There will be intense competition. In fact, real capacity utilization is also, maintained around 70 level. At the same time, a lot more new capacity is coming. But one thing very interesting about this JK Cement and JK Lakshmi, both concerned, whatever the tough conditions they go through in the cement business, they were able to maintain, some sort of growth and margin and a decent financial performance. This is quite surprising. So considering that, I would suggest, holding both JK Cement and JK Lakshmi Cement. And in case JK Cement falls, even 5%, one can buy it for medium to long term.
Okay, so that's the view on intensifying competition in the cement sector. We did talk about fundamentals, but Lakshmikant, you were making a point on JK Cement. Help us understand what level should we keep an eye out on as far as the stock is concerned?
See, this stock has been trending higher for the last few days, but as you said that we have witnessed that negative divergence on the daily RSI and the daily MACD. So I think some sort of pullback move could be expected in this stock. But overall structure seems to be bullish till it hold up the levels of 4,920. So I think till it hold this level, we could anticipate upside momentum in this stock, and we could expect the higher levels toward the levels of 5,950 to 6,000 zone, because overall structure seems to be bullish as this stock is still trading above its all key moving averages, and we expect that till it hold up the levels of 4,920, this ongoing momentum will continue in this stock.
In fact, Lakshmikant, let me come back to you because, at the start of the show, we were talking about SBI and Aditya Birla Sun Life AMC. You were giving your rationale to us on that because Gautam was waiting for your answer, and I think we snapped that line. Do you want to complete the point between SBI and Aditya Birla Sun Life AMC? Which one do you think is a better bet to actually go ahead and place your bet for the next 12 to 18 months?
See, if we talk about for the 12 to 18 months, I think SBI is the best stock which we can recommend for this longer duration of time, because SBI is still holding its key moving averages above its 200 DMA, and from last few days it is hovering above its 200 DMA. So overall structure is it tilted on the positive side, and even the risk reward ratio is looking favorable in SBI. short-term breakout could be expected of the levels of 830. Once it taken out this level, when we could see a higher upside momentum in SBI toward the levels of 880 to 900. And if we look at the stock of the ABS LMC Aditya Birla, so this stock already given the breakout, and but I think one can take a trade for the short term perspective, but not for the longer time perspective.
The view on Aditya Birla Sun Life AMC and on IndusInd Bank. But we have a query that has come in for Mr. Chokalingam on Karnataka Bank. Sonu from Bengaluru has written to us. Sonu holds about 500 shares which were purchased at the price of 215 rupees per share. The stock currently trades at 200, 201 odd levels. What will your view be on Karnataka Bank? And his view, he is asking for a view for a period of 2 years. So what will your fundamental view be?
It's a phenomenal stock, deep value stock. Before that, I want to disclose that we personally hold the stock. We also have a recommendation on the stock. It is trading at around 30-35% discount adjusted book value. It's very surprising. The bank has survived more than 100 years successfully. And secondly, its a business is now nearly about 1.8 lakh crore. And if you look at the market cap and compare with the net worth is substantially more than the market cap. Market cap is 35% discount in net worth. Apart from that, over 900 branches of 900 branches, network of branches, and several hundreds of ATMs. So if you value, the brand, the net worth, the branch network, I think I'm very surprised. Of course, in my career, I was surprised about many small cap stock. They took a much longer time to play out. And I may be wrong, but I believe that this stock will play out in a very big way in the next 2 to 3 years. And, it has invested heavily into technology and people. Now, from 26 onwards, I believe that this is a time for the bank to show the performance in terms of bottom line. And lastly, the bank has brought down net NPA percentage substantially over the last 3 to 5 years. So I believe that it deserves at least a one-time book value in the short term itself. That would mean almost around 300 rupees from the current level.
There's a view coming on Karnataka Bank. We have Mr. Chokalingam, who is pretty positive on that one as well. This one's coming from Tina, wants to know about JSW Infra. 600 shares, Lakshmikant, at a price of 149 rupees per share. Wants to know what the strategy should be. And the holding period, if you advise to hold on to the stock, can be about 12 to 18 months.
The overall structure is on the sideways range because this stock has stuck between the band of 315 to 280 and still struggling to surpass its key moving averages. But as long as it holds up the levels of 275 to 80 zone, I think one can anticipate this upside breakout of the levels of 315. And once it taken out this level, then we could expect this upside move toward the levels of 345 to 355 zone. So if it already bought this stock, then he could keep the stop loss of around 275 and can expect the breakout of the levels of 315. Once we get the decisive breakthrough of the levels of 315, then after we could see upside momentum in this stock toward the levels of 345 to 355 range.
On JSW Infra, once it crosses 315, we could probably see levels of 350 to 355 on the stock. Gaurav from Bengaluru has written to us and he is asking for a view from Mr. Chokalingam on defense stocks, especially after the run-up that we have seen. He says that he missed the rally, and what price can he buy the likes of HAL, BEL, BDL? What will your view be, Mr. Chokalingam, on these defense stocks, especially after the run-up?
Even I missed this rally. It's very difficult to catch them on time. But 9 out of 10 do not have valuation comfort because I do not compromise heavily the valuation comfort. Still, if somebody wants to invest, among all these stocks, HIL is the best defense stock. I mean, sitting on a huge cash and getting a lot of advances from the government, that itself gives you a lot of comfort on the bottom line. So, and also looking at the orders placed, I think this is the only one stock which gives me a lot of confidence within the entire defense space.
Chokilingam being pretty candid enough to actually go ahead and admit that he also missed this sort of a rally coming in the defense counter, because due to the fact that the rally has been actually very swift as well, Mr. Chokilingam, because by the time you actually digested the fact that these stocks have seen sharp correction, you actually in no time seen all of them actually recover quite a bit. But like you said, HAL is the only one that you're liking in the space.
Yes, definitely. You said it rightly.
All right, so HAL is the stock that Mr. Chokilingam is liking in the defense space. Quickly, last query, Lakshmikant, coming to you, Exide. Can Krishnan from Goa buy this for right now for a period of 1 year?
See, Exide is looking good as this stock has broken its previous swing high of 388 to 390 zone, and then after it started making higher tops and higher bottom. And he can, as he asked that he can take entry at current level also. Yes, he can buy this stock at current level also, and in that case, he can keep the stop loss of 364 on the downside, and can expect upside move toward the levels of 435 to 445 June within a year.
Okay, so that's the view coming in on Exide Industries. Mr. Chokilingam and Lakshmikant, thank you so much for taking your time out and joining us here on ET Now and helping us answer all our stock related queries that had come in from our viewers. But that's all the time we have on this edition of the show. Markets are currently absolutely flat for the moment, but don't go anywhere. Markets at noon will take all the market action forward. Stay tuned.